Good morning, everybody. Welcome back to the Opportunistic Trader. It is just before 10 a.m. on October 5th, and we're joined by Alan Hill, who is the lead consultant of Treasury Consultancy. He's been joining us regularly. He writes in our blog posts in the FX blog, and he joins us to discuss FX often. He's located in the UK, so is a keen eye on the Brexit situation. And he's going to talk to us about, in general, the markets, what's happened this week in FX, and looking ahead at next week. Welcome, Alan. How are you?
Hi, I'm well, thanks, Mike. Thanks for inviting me again.
Of course, of course. So it's been an active week, a lot going on. It's the first week of Q4. What's on your radar?
Well, on my radar this week was supposed to be Brexit, but I've been disappointed. But nothing really came of the big deals we were expecting to happen this week, particularly the Theresa May situation with regard to her ability to remain head of the Conservative Party. The promise for rebellion by 80 MPs dwindled its way down to one who signed a letter just before she started her speech on, what was it, Tuesday or Wednesday, telling her that she should resign. So one MP out of 80 actually had the nuts, as it were, to actually put his money where his mouth is. Sterling, obviously. There's been quite a change, I think. I've noticed in the market where in the recent past, and going back quite a long way through Brexit, the market, when there's been no news, the market's taken it that, oh, everything's happening behind the scenes and it's all very jolly. That hasn't really happened. We've had nothing concrete, particularly up until today, or even today's wasn't particularly concrete. Any particularly concrete news from anybody regarding what's going on with Brexit, and sterling started to drift a lot lower. I mean, what was the long week? 129, 14, 15, something like that. So the market seems to be thinking that hard Brexit's becoming slightly more likely. So that's an interesting turnaround. But this morning's news, I mean, I saw it as I was writing a report, and I just stuck it into, I think it was into my blog for you guys this morning, that someone had come out and said that a divorce deal is very close. Well, but if you took these words at their meaning, a divorce deal has been close for a very long time. But unfortunately, some of the comments that were made by certain members of the Conservative Party this week, likening the EU to Soviet Russia, etc., don't really gel with the fact that the deal's quite close. So we carry on the same, and we just see what happens as Parliament starts going again next week. I mean, that sterling for me is a sell on rallies, but we have to be very careful because, as I said in the blog this morning, there could be a rabbit pulled out of a hat and suddenly a deal is agreed. But we go from there. And as I say, I prefer to go for the short side. But there is clearly a lot of stops up above. And if we did get some announcement, it could be very, very difficult to actually get out of a short position. The other big story this week clearly has been Italy, of course, with their budget and the fact that it's going to be apparently 2.4% of GDP, which is 3 times the size of what had been agreed by the previous government with Brussels. This has caused a great deal of consternation in the debt markets. The spread between Italian and German debt widened out quite considerably. And it put a lot of pressure on the EU because the indebted nations have to get their budgets approved by Frankfurt and by Brussels, by the ECB and by the European Council. It's not going very well. And it was an interesting comment from the economy minister, who said that, Signor Tria, who said that he would ensure that there's a line in the sand, and the budget is definitely not going to be more than 1.6% of GDP. He clearly likes his job because it came out at 2.4 and he's still working there. So he wasn't that strong in his line in the sand. So that's something that's going to continue to run. And I think that story is just part of an ongoing story that there is a populist nationalist government in Italy now, one of the biggest nations within the EU, and they are going to continue to cause trouble. There's a lot of things they want to do, a lot of things they may not be allowed to do, but while they keep having a huge, or at least a very, very, very large popular vote in their favour, they're going to continue to try and upset everybody. That's not particularly their.
Well, let's stay on this Italy point for a bit, because this was a big key for the market for this week. Italian MIB index was down pretty heavy at one point early in the week, and it's actually trading heavy today. It's down 1.35% right now. What's the focus? What's
Mhm.
coming out next, and where do we stand? And like, what are we looking for over the next week in that?
Well, yeah, going forward, looking forward, the budget still has not been approved by Brussels, but the kind of sweetener for them from Italy has been that they will. Rather than have 2.4% for the next 3 years, which is what they originally said they would do, they've reduced it a little to 2.2% in 2020 and 2% in 2021. So they've showed that they are looking to get back on track again. But unfortunately, with growth at only 1.3%, it's going to take them a long time to get their debt to GDP ratio, which is 130% currently and looking to rise, back anywhere near where it should be, which is around 60% of GDP. So Italy is going to be a drag on the EU for quite some time, and it's also going to be a drag on the euro. I was quite surprised to see just how vehement the fall was in the euro. We traded down to what, 114 and change, 114.90 something, or 114.80 something. We've been up near 118.20 earlier in the week, and it was looking as if that resistance may get tested. So it's been quite a big move, and obviously there was a lot more there's a lot more longs in the market than actually I appreciated, and that's what's pushed it all the way down now. I thought the low was 114. Where are we? 64. So it's been quite a long way down, but that level looks quite strong, and it looks like it could rally a little from here, the euro. But again, of course, that's, as we said offline a moment ago, a lot to do with what's happening with the dollar as well. The dollar hasn't rallied quite as strongly on the back of the yield change as we may have expected.
Yeah, absolutely. And just updating that, it's interesting. Italy's been heavily in the headlines, and I'm just looking at year to date. The FTSE, the Italian MIB is down 7% year to date. So it's underperforming, but also if you take a look at the same time, the DAX is down 6.2%. So it's not heavily underperforming the DAX, I should say. But Italian, European
No,
markets
it's
are
not.
doing.
It's quite right. Exactly, but that's the thing now. You see, it's all lumped together. In the old days, the DAX probably would have been up on the back of this news from Italy, and with the MIB much lower. But because we have this single currency now, and everyone's in together, they they're all considered in the same pot. But one thing is interesting is Mario Draghi saw. The ECB president, he saw the president of Italy earlier in the week to discuss the budget, and nothing's been reported on that at all. So he had no um, the president, first of all, the president of Italy has no say in what's going on with that anyway. It's very much the prime minister and the elected representatives. But even so, Signor Draghi will clearly be concerned about what's going on with that, and he is trying to push this new agenda through, where he's looking to create a fund to help both the indebted nations and also the banks when they get into trouble through no fault of their own. But he's not getting any support for that at all, and that's very much coming from Germany. Germany are very anti doing any more for the EU in general than they've already done, and that I think is a fair point. There was an interesting piece of data out in Germany today as well. Their manufacturing was much higher, much better than expected, and that was because there's been a logjam in auto manufacturing, because there's been a new pollution standard being introduced, and a lot of the factories have had to close or at least go on to shutdown while they've introduced the new equipment, etc., which needs to be in place for this pollution thing, and that's now been cleared, and the factories are all opening, and that's what's pushed German manufacturing output quite a lot higher. So that logjam's probably gone now. So we'll see maybe a bit of a turnaround in German data going forward.
Yeah, sure. So you've been talking with us. You lean on the bear side in the pound. Any sort of other views that you kind of are looking at right now?
I mean, I still think the Aussie can rally from here. I mean, it's come a long way down over this week again. Some data which wasn't particularly inviting, but I still favour the Australian dollar a little, because I think it was very much overdone on the Chinese spat with the US on the trade side. I think that's hit the Aussie quite hard. I would probably be on balance. I'd probably want to buy euros from here as well. I think that Italy is going to be there for quite some time. The world knows Italy is going to be a thorn in the side of the EU. There is absolutely no chance that Italy is going to leave the euro or the EU. That was so much bluster. It was incredible from the Prime Minister in the week, who said that first of all said that they would seriously consider another currency, and then said that the euro was untouchable. So he basically countermanded his own argument there. But I would probably try and buy. I would probably be considering buying euros. Anything below 115, I think, is a good buy for the euro. I think over the coming weeks, we may see inflation start to tick up across the eurozone, and that will at least focus attention on the ECB. Not that they'll be doing anything. I mean, I think they've been pretty clear that they're not going to hike rates, well, for probably a year from now. But they do start with the withdrawal of the accommodation. The asset purchase plan will be halved this month from 15 billion down to. Sorry, from 30 billion down to 15 billion by the end of this month, and that will be the same going forward. Hopefully, to be completely finished by the end of the year. So that's going to tighten money supply across the eurozone, which will see things move a little bit. But I still think that the euro is going to start to rally from here a little bit as well. I think it's been a huge move this week when you look at the charts.
Yeah. Any sort of technical levels that you look at, or do you really look at things much more on the fundamental side?
I've got. I mean, okay. I don't look at technicals that much, but I have a candle chart of euro dollar in front of me now, and I can't. I don't know most of the. I don't get involved too much in a lot of the terms, but for me, it looks quite well supported around this 114.80 level, even down. Well, and down much lower than that, around the 113.5, 113.20. But I don't think it would get anywhere near that, and I think it would take a major shock to push it that low. I think what we've seen this week is a washout of very stale longs who've basically been sitting waiting for that 118.20 level to go. It's clearly Italy has pushed them into realizing it's not going to go in the short term, so they've bailed out and will maybe look to get in again around these levels.
Interesting. Okay. What else? Anything you're looking at next week that you kind of scoured, and key thoughts or data points or?
I'm just getting the calendar up in front of me now. Yeah. We must be coming. Yeah, we've got a bit of manufacturing data on. Where are we? On Wednesday in the UK. Yeah, the manufacturing data is out, which has been uniformly weak recently, and I would expect that to not to be a little bit stronger. We're looking at manufacturing production was 1.1 in where are we in July? That's looking like it could be 1.5 to 1.8% in August, which is quite strong. The trade data looks like being far worse. The goods trade is looking like it was going to be around 12 billion when it was 9.5 or 9.9 in August. In July. And the monthly GDP figure is going to be poor as well at 0.2 versus 0.3. It's all bubbling under with the Brexit thing, because basically manufacturing investment has fallen off a cliff and is not a long time ago now, and is not recovering because businesses just cannot be seen to invest in their own businesses because they have no idea which turn we're going to be able to take, and so that's hit growth, that's hit industrial investment very hard, and it's going to continue to do so and of course next week we're expecting at some point a Brexit announcement, because they've got the end of the month is the date when they're expecting to sign everything off, and that is still in place. So if there is this possibility of an agreement being found, then it's going to have to be found very quickly now, and we could see something quite interesting. One other thing that could happen this weekend, of course, is fresh from the Conservative Party conference, Boris Johnson was very critical of his, well, I suppose she's his boss, Theresa May, and after this speech and being slapped down by her, he's gone very quiet. Now, the weekends tend to be the time in the UK when we see all this spike come out in the written press, and there will be, if there's going to be a leadership challenge, and it's going to have to come sooner rather than later. Otherwise, it's just going to fizzle out. So if we saw something like that happen this weekend, then the opening in in New Zealand and into the Australia market on Sunday night our time, Monday morning there. Could be very, very interesting.
Yeah. Well, I know you got to run, but thanks for joining us. We'll
Oh,
definitely keep an
yeah.
eye on that. And yeah, we'll look forward to speaking with you next week. Give us some updates, some thoughts. And then each week you can, or each day you can catch, mostly almost every day, Alan's been writing a blog for us on some general thoughts on FX and the active events out of Europe. So, Alan Hill, Treasury Consultancy, thanks for joining us.
My pleasure. Thank you very much, Mike.
All right.